Good day, fellow investors. We recently launched our YouTube portfolio where we plan to have 40 positions, follow them, cover them over time, learn more about businesses, and one business that we cannot not have in the portfolio is Berkshire. That would, of course, be a real double negative not having Berkshire in the portfolio. The goal of the portfolio is to follow 40 companies, learn about them, understand the risk and reward, and also show exposure, which is also something that we'll focus today with Berkshire. Analyze the company, look at the risk and reward, and understand the real investment thesis back there so that you can see how it fits you. That's the goal of the channel, of everything. So if you enjoyed that, please smash that like button to support the channel. It really means a lot. YouTube income is donated to our charities, so that really helps. So subscribe and smash that notification bell too. Let's now discuss Berkshire and why we'll put it in the YouTube portfolio. So Berkshire Hathaway, of course, Warren Buffett's business. Now it is down from the recent peak from March, 22%. It jumped up when the market started going down, especially with the growth stocks. A lot of people were focused on value and quality then, and Berkshire is certainly value and quality. We are here now. The market cap is 615 billion, and we have to see how that fits you as an investor. Of course, Berkshire is a long-term compounding business. There will always be these lows, ups and downs, but over the long term, it should compound steadily. Because if we look at the business, Berkshire is Berkshire, so insurance, the free float from the insurance is invested into businesses, great brands, really things that keep the economy there. Railway, so we have Mid-American Energy, so Berkshire Hathaway Energy, great businesses, American businesses that if you invest in Berkshire, you invest in the American economy, plus you get there Warren Buffett, you get that attitude of long-term value investing, also in stocks, but also in businesses that combined has brought to 20% yearly returns. And if they just keep on doing 8, 9, 10%, then you have a great return. They are a financial fortress. It's extremely unlikely that Berkshire will go bankrupt. Other 505 businesses, because there is 506 in the S&P 500, will likely go bankrupt before Berkshire does. So you have a financial fortress, really a value investing attitude, and you can have them work for you by buying a share. So that's Berkshire, and that's why I think it fits perfectly our YouTube portfolio for educational purposes. Now we have to see how much to buy of it, and for that we need to make a valuation. Now on my stock market research platform where I cover many stocks, one of the covered stocks is also Berkshire, and I have put it here on free preview, so you can check my 2-page, actually 4-page summary about every investment thesis. I do that for all stocks, and here is also Berkshire, but I think that Berkshire is a great company for investment analysis, and therefore I really want to show you here. So I just wrote this, and also in line with the purchase for the portfolio that I'll do in a moment, and you can see the start here, stock overview, the market capitalization, which is used for valuations. It is down, which is then always better. And here let's start with the analysis of net income. You can slowly read this. So net income from owned businesses is about 27 billion, 28 per year. Warren Buffett says it simply: we make around 7 billion in cash that I get into my hands and I have to reinvest every quarter. 7 billion times 4 is 28 billion. That's Berkshire's earnings. But there is something else. Berkshire has hidden earnings. If Berkshire would own the below businesses, thus these businesses completely, then it would put also the net income into its financial statements. It doesn't. It puts only the dividend in. For example, and you can download this also, so as I said, I put it in a free preview. I'll put the direct link, and you can check also here what else I do on my platform if you are interested and if you think it can save you time or give you other value. So let me do the example. Berkshire owns 5.6% of Apple, and Apple makes 5.6 billion a year. Berkshire thus should report 5.6 billion from Apple, but it doesn't. It only reports dividends or 5.6% of it. Thus 820 million is reported in place of 5.6 billion. 4.8 billion is hidden earnings. That's the key there. If you add American Express, same situation, only 20% of income is paid for dividends, thus another 1.6, we are already at 6.4 billion. Other companies in the portfolio also like that, but they don't all pay small dividends, some pay bigger dividends, some are more cyclical. All in all, I usually use 36 billion to calculate the earnings that Berkshire does for valuation purposes. And then for valuation, I always like to go to my intrinsic table. Berkshire is on both my intrinsic tables, both the premium and the free one. This is the free one, again, downloadable in the link in the description below. If you want to check more about the portfolio we're building, you can click here. And Berkshire, if we go for valuation, we have it here 36 billion. If we divide it for Berkshire, the B share, 1,500 B shares is one A share, so it's no difference there. And it comes to 15.5, $16 per share in earnings. As Berkshire doesn't pay a dividend, I haven't calculated the present value of these earnings because those are reinvested for growth. And given a few recessions here and there, I think Berkshire will grow at 6%, inflation and everything. So earnings growth of 6% is my valuation. And now the question is the expected return or the discount rate. If I put 7%, then the intrinsic value is 269 with a P ratio of 20. And that's in line with Berkshire's current stock price. So 7% expected, but actually Berkshire's average price earnings ratio historically is 15. So that would make Berkshire a little bit too expensive for a 7% return. Thus likely the return around 4% long term, because the valuation will likely contract and usually contracts over time. So that would bring Berkshire to a fair value, but then expect really lower returns. That's the big issue with Berkshire now. If I put a 10% discount rate, then the intrinsic value is 153. And 153 was really close here in May, and I made this video. So Berkshire, you won't see it this cheap again, but that's also exactly why I want to put this into the portfolio, because I want to watch it, and when it comes this cheap again at the price earnings ratio of 10, I want to buy much more. Here is now the transaction. By Berkshire for our YouTube portfolio. As you can see, this looks better than my Excel sheet, so I have transferred everything to a demo Interactive Brokers portfolio, because Interactive Brokers is practically the only global broker that covers all the markets that I invest, and I like to invest globally. So if you want to support the channel, I get a small fee if you click on the Interactive Brokers link in the description below. And if you're looking for an interactive global broker, low-cost brokers, but all the tools, options, everything you practically need for good global investing, I think. And therefore I have taken this demo account to show our YouTube portfolio. So now we have Meta in the portfolio, Devro, Rubis, European to European small caps, and also Warner Bros. Discovery as a spin-off value investment. Now, I really want to add Berkshire to the portfolio, but also make it in a way also to discuss strategies when it comes to price relation. This portfolio is a million, so I can open 30 positions, around 30,000, 33 positions, and that's my goal, so that we can learn more about these positions. Now, we have analyzed Berkshire, and from an absolute value perspective, it looks pretty expensive. So I want to add it to the portfolio and then add more to it when it becomes cheaper. So I'm going to buy now $10,000 of Berkshire. So not 100 stocks, but let's see if 30 makes it. 30, we are 8.3, let's see, around 40, too much, 47 stocks, 46 stocks of Berkshire at today's price, and I think that should be okay. $10,000 invested, and let's see if it buys. Order filled, so that's it. Now we have 10,000 here. Why 10,000? Because for me now Berkshire is extremely expensive. It is a great business, as we have said, really the value investment lighthouse of Wall Street, of the stock market, but it is pretty damn expensive now. Therefore, just 10,000. When this crashes 30%, then we'll add another 10,000, and when it crashes another 20, 30, more 10,000, and then even 10,000 more to 40 or even to 50, depending on how the valuations work out in our portfolio. And we'll see that when we have here 30, 33 positions from our YouTube analysis that we have made and that we will make over time. So for the portfolio updates, as I said, now we are at 5 stocks, so still 27 to go. We'll make the analysis, we'll do the research, and I really hope you will enjoy this. As the main update, we have now a demo account on Interactive Brokers that should work better. We'll then have likely portfolio movements to show how everything goes, so that will make things more interesting. And the most important thing, we'll watch here the profits and losses on the positions, how it works. Looks like everything is green today, but then we'll also see how it develops, add more to those that are now expensive but are worth to be followed and covered, and then we can learn more about our investments. So I really hope you will enjoy this portfolio adventure that we just started. So this is what I do. I have the premium version on my platform. You can check that out. The link is in the description below. And when it comes to this portfolio, I'm really happy to have Berkshire in it, even if it is in this exposure, and we'll follow it. When it goes lower, we'll start increasing it. And that's value investing. Berkshire is the absolute lighthouse of value investing, but for real value investors, from an absolute investing perspective, too expensive now. And that's what I want to teach also by developing this portfolio. So please subscribe, smash that like button if you enjoyed this video, and I'll see you in the next video.